The strategic planning secret. Now you recognize that you can in reality accumulate wealth for free by using excess interest and other costs, as well as the taxes you would otherwise pay beyond the requirements of the actual language of the law, to fund an Index Universal Life or IUL insurance wealth account. Have you identified all three keys to this secret? Key to the strategic tax planning element, the legally enforceable contract between your business and the tax-free organization facilitates generation of tax-free income, and cash value life insurance facilitates tax-free wealth generation and distributions. So you may reinvest 100% of your interest and retain 100% of your future distributions. Key to the strategic legal planning element, your generation of revenue for your state-registered business and as agent for the private, lawfully income tax-free organization facilitates redistribution of excess tax costs. So you may fund your wealth account for free, with little or nothing actually out of pocket. Key to the strategic financial planning element, the index strategy facilitates both avoidance of market losses and efficient application of the Rule of 72 by means of performance guarantees, so your account values may double as frequently as possible with compound interest. There is yet another, a fifth, compound synergy among strategic tax planning, strategic legal planning, and strategic financial planning, in that implementing all three of these elements makes it possible both to exercise your constitutional and lawful rights and privileges while complying with the obligations of the actual language of the law and cooperating with the standards of professional and governmental practice, and to maintain your appearance. That is, enjoy a measure of financial prosperity you could not otherwise achieve without also drawing adverse attention or consequences to yourself. Remember that generation of wealth and income in the most efficient, safe, and secure way possible is characteristic of this compound synergy, so that your financial prosperity thrives on its own, instead of growing only as much and as long as you can push it through many adversities. Thanks to compound synergy, you are also causing your foundation for financial prosperity to be reinforced and your wealth-generating power to be enhanced, magnified, and unrestricted. If you have not already done so, use the total tax amounts from your recent individual income tax returns to see how much money you could be using as IUL wealth account funding. Depending on the year, look at lines 60, 61, 62, or 63 on your federal individual income tax returns. Refer also to your state income tax returns, if any. As you finish fully implementing a specific strategic tax plan to avoid waiving your right to make your own informed determinations of law with regard to how much tax the actual language of the law requires you to pay, a specific strategic legal plan to protect your privacy and to protect yourself against losses due to extortion and fraud, and a specific strategic financial plan to generate compound interest and to protect yourself against market losses, begin referring to the IUL instructions and the IUL strategy implementation instructions accompanying this session. Use these instructions to maintain your appearance as you implement the sub-steps for redistributing excess interest and taxes as IUL wealth account funding, while cooperating with the standards of professional and governmental practice by continuing to file business and individual income tax returns. Service providers are making available to you free annual federal business income tax return preparation with 12 months paid bookkeeping for your state-registered corporation, partnership, or LLC. Email your first name, state, phone number, and the best time to reach you with assistance in regard to either implementing the sub-steps for redistributing excess interest and taxes as IUL or Roth IRA IA wealth account funding, or obtaining free annual federal business income tax return preparation with 12 months paid bookkeeping for your state-registered corporation, partnership, or LLC. Permanently risk-free, tax-free, compound interest-bearing wealth and income. Is life insurance truly tax-free or just tax-deferred? Permanent or cash value life insurance is typically synonymous with tax-free, since the law specifically makes proceeds tax-free when paid to the beneficiary upon the death of the insured. However, canceling a life insurance contract or allowing it to lapse results in taxation on the interest earned. Also, overfunding the contract, exceeding the customizable annual contribution limit during the first 7 years, results in taxation on the account as a modified endowment contract. The reasoning being that, in simple terms, it is more a very large tax-free savings account with a little life insurance than a tax-free life insurance contract with a little cash value. From this perspective, life insurance account values grow on a tax-deferred basis. As long as the contract is not overfunded during the first 7 years, and as long as cash values are sufficient to cover the monthly cost of insurance deductions, the policy will pay a death benefit to your beneficiaries on a tax-free basis. The total death benefit consists of the face value of the policy contract, adjusted by any outstanding loans and distributions against the cash value, the tax-deferred interest portion of which then also becomes tax-free. How easily accessible is your life insurance cash value? Permanent or cash value life insurance account values are not accessible via checks and debit cards, so they work rather like a very secure piggy bank that gets fatter and fatter since you do not allow yourself to touch the money at every convenient opportunity, as you might with a typical bank account. On the other hand, once your wealth account value has reached a sufficient size, typically within the first several years, you may access it for only your most important purposes by means of a phone call or the internet in either overnight delivery or bank wire. Accordingly, an IUL contract will help you treat your growing, permanently risk-free tax-free cash value most responsibly, rather than like an ATM, as Robert Berger puts it in the article accompanying this session. This is yet another reason Index Universal Life, or IUL insurance, is the most effective means of observing all three principles in combination for achieving financial prosperity. Only an IUL provides permanently risk-free tax-free compound interest-bearing retirement wealth and income, even an annual six-figure interest income for the rest of your life, with no early or late distribution penalties or minimum distribution requirements, and with a substantial umbrella of financial protection. For example, just $6,000 of excess interest and tax costs placed in an IUL with 12% index interest credits would take just 6 years to double or grow 100% to $12,000. 72 divided by 12 equals 6. If you started at age 18, at 12%, that same $6,000 would grow to $1,536,000 by age 66. $6,000 at age 18 would become $12,000 6 years later at age 24. $24,000 at 30, $48,000 at 36, $96,000 at 42, $192,000 at 48, $384,000 at 54, $768,000 at 60, and $1,536,000 at age 66. This from just 1 year's contribution. An objective approach, though, will help you keep your senses and not reason that all it takes is $6,000 to get to $1.5 million and a six-figure income. In this example, it took $6,000 at age 18, plus 12% interest compounded over 48 years. As the two 1-minute videos linked to the second session explain, the longer you wait to get started, the much greater the amount you need to set aside each month to make up for lost time and lost compounded interest. Nevertheless, this kind of growth is easily within your reach. As the article excerpt accompanying the first session mentions, your federal tax bill could total in the hundreds of thousands of dollars over the course of your lifetime. If you earn a six-figure income, then you might be looking at $1 million lifetime tax bill. You now know precisely what to do lawfully to divert this unnecessary cost to your own permanently risk-free tax-free compound interest-bearing wealth account and to generate an annual six-figure tax-free interest income for the rest of your life. This is your loss of sufficient wealth and income if you do not implement all 5 steps for observing all 3 principles in combination for achieving financial prosperity.